Hey folks, this episode is sponsored by City Traders Imperium. Now, what you might not know is CTI has the best funded account conditions up to $2 million, which is the most in the industry. Now, go check out the video I recorded with them to learn more about their incredible package where Trading Nut listeners get an exclusive deal. It includes access to their high-performance trader mastermind and funding program. What are you waiting for? Click the link in the description below or above and go check out that video. All right, folks, here we are on Trading Nut. We've got Julian from A Trader's Journey here. We've just done an amazing podcast. You want to go and check that out. There's a link under this video. Now, Julian's going to walk us through his step-by-step checklist and then the trade that he took, which gained multiple R in just a second. So welcome to the show, Julian. How are you?
Hey, good. Thanks, Cam. How you doing?
Good, mate. Good. Well, look, let's share your screen, get on with this, and see how this trade is done and this checklist.
All right, let's do it. So first of all, this is just like a really, really simple strategy, but the entry has to be from the lower time frames because you can get higher, basically profits. You can have more, risk in the trade basically and greater profit potential. So all we need from this I2 strategy is just a break of structure and then a pullback, right? So using the Fibonacci, the 50 EMA, and RSI for hidden divergence, because a lot of the times the hidden divergence is used for trending moves, whereas divergence is used for more reversals or ranging markets. So I'll explain what that means in just a minute. So really you want confluence with the H4 and daily time frame. And then I do use a graded system down here just to make sure I'm getting myself into A setups or higher, right? And so this all comes from back testing. So first of all we need is a break of structure and a retracement. I'm going to go ahead and break down my analysis real quick on EuroCAD and why I actually got into it. And then I'll go into my execution phase. So basically we see a market that was in this range, pretty much broke out of the range. Everyone knows what happens when a market breaks out of a range. It usually starts a new trend, right? So distribution, we have a break of structure right here, followed by these lower lows and lower highs. Now, interestingly enough, whenever you have, a big swing on the lower time frames, you're going to see, these smaller trends as well. And they don't even break market structure. So you see lower high, lower high, lower high. And this right around here is where I was starting to execute my trade going just simply with the trend, right? But it's not on the daily. So we further see these lower highs and lower lows in the market. You can actually confirm a lower low or a higher high with, basic market structure. So you see how, price creates a lower high, doesn't break it, creates another lower high, doesn't break it, creates another lower high, doesn't break it. But in this whole swing, as soon as market starts to break structure here, we've confirmed a lower low and we can start to look for potential reversals in this market, right? So right around here is when I was starting to look for my entry system that comes from the hourly. So we can see everything is sort of in confluence. And once the market breaks a low again, we've now confirmed that the market wants to continue this overall downtrend. This corrective market has finished. And so we can start to look for continuations. So this is when we go to our checklist basically, and we make sure everything lines up. The trade was, I believe, somewhere around here. Right. So let's go to the checklist. So we have a break of structure. Structure just means support or resistance. It's just an easy way to say support or resistance. So we see support get formed by this wick and we see a break down here. And then we see the retracement. So that's the first step checked. And then we need hidden divergence. Right. So all we have to do is for the hidden divergence, you want to see price making a lower high while the RSI or whatever oscillator makes a higher high. Right. So we see this lower high right here, and then this lower high right here. But if you connect them, we see a higher high get formed on the RSI.
Now, you might already know the boundaries of trading are expanding faster than ever, but what you may not know is there's still time to take advantage of these opportunities. With my sponsor, Sage Strategies, you can instantly get access to institutional grade algorithms built on the back of decades of professional fund management experience. This means their systems are robustly tested, risk managed, and rigorously informed by their team of experts. Go and check them out at sagestrategies.io or click the link in the description.
So second one checked. And then we need at least a 50 to 78% retracement from the Fibonacci. So all you do is you put on the Fibonacci from this point to this point, and you have a 60% check or an H1 entry candle for selling, buyers blink. Basically, you just want to make sure like there's a reversal candlestick pattern, and we get that right around here, right? So right around here, this close. And touch of the 50 EMA, which you just saw, touch the 50 EMA. And if it closes back through, it must close near the 50 EMA, and it closed past it. So we don't need to look at that. So basically these two rules are just saying, making sure everything is in confluence. So there's no higher time frame candlesticks against the trade, because what that can usually mean is typically in a tip back or in a pullback, you'll see the market pull back, but there'll be so much momentum that you won't realize that if you just flip one time frame higher, it'll actually be some type of engulfing on the daily or on the 4 hour. So you just want to make sure everything is lining up a little bit. And once we have all these, then we can go to our entry time frame and look for either an engulfing, a shooting star, hammer, or a morning star and evening star. So we got onto the 15-minute, scroll back over here. So this was the close right around here, right? So the close of the market came, or of the hourly came right around here. So all I did was wait for this retracement to happen, because you can see how, right? So, price is fractal. So just the same things happen on all time frames, higher high, higher lows. So once this low gets broken, we've confirmed the bearish trend going in the direction of the higher time frame trend. And then we get, a little pullback on the 15-minute. So then the entry was just about right here on this candlestick pattern. And we were able to pull, it was about a 5R on this trade right here, coming back down, right? So the entry candlestick pattern was taken, and there's even, rules for the stop loss placement, 2 to 3 pips above, a level of market structure, and how to actually manage the trade. So all I'm doing is I'm moving my stop loss to 1 pip in profit after 1R, and I'm taking 50%. So, and then you just aim for the next market structure. But if there's a strong trend, it's likely to continue. So that's the reason for aiming for this 5R. But if you just go to the higher time frame and look left, you should see market structure right over here, where it would be a great place to take profit. You can see this support forming, this demand zone, and you can see right where price should start to go towards. So overall, 5R trade, using a checklist. Try the checklist is just for consistency. You know what I mean? So you want to be consistent in your trades. And the multiple entry time frame approach is to have these higher reward to risk ratio trades. You know what I mean? Because if I would have entered on the hourly, it would have been like a barely a 1-to-1 or something like that. So that's the whole reason for that. But that was the trade.
Awesome. Well, look, that's fantastic to see that trade in action, and also fantastic to see the checklist working as well. So do you tick those every single time that you go through a trade?
Yeah, every single time on my live stream, I do it in front of a couple hundred people, and I'll be like, check, 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 check.
Hey, have you ever wondered what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer because I was looking for a broker with really good trading conditions and one that had no restrictions on trading my strategies. But the main reason I went with Hanko Trade was their raw ECN spread. Look, it will challenge any broker that you're trading with. If you want to find out more, check out hankotrade.com, or there is a link in the description. Cool. Awesome. Guys, well, look, there you go. It's probably the best step-by-step strategy I've seen on a Forex market broken down like that. So thank you very much for that, Julian. Now, before we wrap up, what's the best way for the guys to get hold of you?
Yeah, A Trader's Journey, my YouTube channel. You guys can catch me live streaming there. You can come trade with me any day of the week. So yeah.
Awesome. Great. Well, look, guys, we did do a podcast before this as well. So if you do want to listen to that, there's a link below the video. Also, do remember to hit subscribe, hit like, and click the bell and click notifications. If you click all, if you do want to get future notifications about videos like this coming up here on the channel. Guys, thanks for watching, and we'll see you in the next one.